crazy, right? Do you want to invest like a billionaire? Neo-brokers like Robinhood or SoFi starting to offer real private equity funds so that you and I and normal people can buy too. Previously, they were exclusive to high net worth individuals, aka rich people. So you and I normally cannot buy these kind of things. And apparently they have higher return than normal stock investment. Should we buy now before it's too late? If this is the first time you're here, my name is Eric. I've been investing for more than 22 years in all kinds of instruments: stocks, mutual funds, bonds, warrants, options, futures, physical gold, physical silver, watches, you name it. In this channel, I'm going to share my insights based on my own mistakes and learnings so that you can save yourself time and money. So subscribe now. So what exactly is private equity? As the name suggests, they are equity or shares of companies that are not publicly available. So they are not listed on NYSE, NASDAQ or other public stock exchanges. So it's not that easy to buy them. They buy or invest in companies so that they can turn around them. Basically restructuring, cutting costs, maximizing values, in short, making more profits. And then they will sell it to other investors, other PE funds, or even IPO. So if you don't know what is IPO, check out the link above. Basically are listing a private company onto a public stock exchange. Private equity fund sounds very attractive. It is an alternative to stock market. It has apparently higher return, and for me personally, because I'm also investigating for my own investment, is that it sounds cool to have something exclusive to rich people and now open to us. This sounds special, right? Should we buy it now before it is too late? What are the pros and cons of investing in private equity funds? Let's start with the pros. First of all, it sounds very cool to me. It is exclusive to high net worth individuals, aka rich people. So if now I have this access, I feel like I'm rich people too. But is it even true? Okay, before you start commenting and say, hey, actually it's not that exclusive, you can see private equity ETFs everywhere. Well, they are actually not really private equity funds. Most of them are just the publicly traded stocks of private equity management companies. Well, obviously they charge management fees of private equity funds, but those are not those PE funds that actually makes 2 times, 3 times, 4 times of profit within a few years. Number 1, the pro is that the return is higher than stock market or stock market ETFs, which is true. Of course, it varies a lot, depends on the project. And some of the projects, they might have twice the return, 3 times, 4 times, even 5 times within 5 to 7 years. However, on average, we would say it's around 10 to 12% of return every single year before the fees. Pro number 2, they are alternative to the stock market or ETFs on the stock market. Because as you know, if the market crashes, everything would be crashing if they are publicly traded, even though those companies are doing well. However, as private equity are not being traded on the stock market, if those companies making profits and going up, the price for selling could still go up rather than crashing together with the rest of the market. However, some people argue that this is not exactly true. Market sentiments and in general the stock market would have an impact on the price of those private equity. But in theory, they are alternative to stock market and the stock ETFs. That's why it could be a good hedge against market volatility. How about the cons, the disadvantages of investing in private equity funds? Number 1, because it is exclusive, it's private, so it's not listed on the public stock exchange, which means there are not thousands, if not tens of thousands of people buying or selling their stock. That means it's very difficult to sell, and you might need to stuck with the project until it's concluded after 7 years. However, for private equity, it is much higher. We're talking about 1 to 5% of spread. So let's say if you want to buy it, it would cost you $10,000 plus $500, $10,500. But when you sell it, you can only sell it for $10,000. So the difference is $500 out of $10,000, 5%. This is 500 times higher than the threat of normal stocks. The third con is the turnaround risks. So obviously by nature, private equity is to turn around a company to make it more profitable. They need to restructure, they need to fire people, they need to maximize profits in other places. It might also not work. The fourth con is the concentration risk. Because for normal ETFs like S&P 500, obviously it has 500 stocks in the index within the ETF. Some are even higher. If you're talking about global markets, global index, they might trace 3,000 to 4,000 stocks. So even if 2 or 3 of them didn't work out, it doesn't have an impact. But private equity funds normally only has 10 to 20 stocks included. So that means if 1 or 2 of them didn't work out, it will have a huge impact on the fund. Before I go to the most important con, do you think that you are going to invest like a billionaire into private equity now? Leave me in the comments below. Number 5, the most important and most concrete disadvantage of investing in private equity funds. Drum roll. The costs. Well, typical ETFs in stock markets or indexes would range from 0.02% to 0.3%, which is pretty low. But for private equity, first of all, you need to pay 2% of management fee, no matter you make money or not. That means if you invest $100, every single year you will lose $2, even if it doesn't make any money. Plus, even worse, the performance fee is 20%, 20, yes. So if they make any money, you will need to pay 20% of the profits from those money. That means in total, you're paying 22% per year potentially just for the management of the PE fund. This is 100 times more expensive than the traditional ETFs. Crazy, right? Before I go to the verdict, subscribe now if you don't want to miss out this kind of analysis, and give us a like so that we got motivated to make better videos. Back to the verdict. So, are we going to invest like a billionaire into private equity funds now? Well, the key questions, even if you ignore the risks I have mentioned, is that whether the return is actually higher than a traditional ETF. We're talking about traditional ETF is, on average, 9 to 10% return before fees and before tax, of course. If you invest in PE funds, the average return is around 10 to 12%. So on average, it's only 3% higher than investing in normal and cheaper ETFs. Given the costs involved, the risk, the concentration risk which is high, and the difficulty to buy and sell private equity funds, I myself would not buy too much. However, I would buy a small proportion of my portfolio just to balance the portfolio a little bit, have a little bit of alternatives, but I'm not going to bet heavy into that. What do you think about that? Leave me in the comments below. Subscribe so that you're not going to miss out my next analysis. See you next time.